Hello, everyone. I hope you all are doing great and your studies are going just as great as you are doing. So, I'm going to start with these marathon lectures for all the chapters of law for the September exam, CA Inter. And in this series today, I'm coming up with this chapter, Declaration and Payment of Dividend. So, this chapter basically covers from section 123 to 127. When I talk about dividend, dividend is nothing but the return on my investment. I have invested money in your company in the form of some return that I get in the form of money is dividend. I get other forms of returns also which are not in the form of money. But when I get a return in the form of money, we call it as dividend. Now, when we talk about dividend, the definition says dividend includes interim dividend. That means whatever provisions are applicable to dividend also applies to interim dividend. Now, so basically, what are the two types of dividend that we have? When we talk about companies, company can declare two types of dividend. The first is interim, the second is final. The first is interim and the second is final. Interim dividend is declared by the board of directors, whereas final dividend, if you remember, when we were doing section 102, ordinary business, declaration of dividend was the second ordinary business given there under section 102. So when we talk about final dividend, it is actually declared by the shareholders. But before we declare it, that is before the shareholders declare it, it is actually proposed by the board of directors. So the board of directors propose that this is the dividend that we can declare, and the shareholders in the AGM declare this dividend. Ma'am, you just told us that the rules of final dividend and interim dividend is the same. And you are just now telling us that it is declared by the board, whereas this is declared by the shareholders. So the thing is that other than the authority to declare and the sources, that is the funds from where the declaration is made, other than these two are different. The rest all are same. All the other provisions will apply both to final and interim dividend. But when it comes to authority to declare and when it comes to the sources for the money to declare, that is different, right? So now, when we talk about final dividend is declared out of what? Out of the profits. That means in that year, whatever profits the company has earned in the financial year, company can declare dividend out of that. Accumulated profits, that means out of what? The reserves. Can we use both to declare? Yes. And out of the money or out of the money received in pursuance to a guarantee given. So sometimes the government can give an assurance that if invest in this company, if the company does not pay dividend, I'll pay it for you. So in that case, the money is provided by the government to the company to pay the dividend. So if the guarantee is given by the government, any money which is received from the government can be used to give the dividend. However, when we calculate this profit, from this profit, we have to make sure that notional gains, unrealized gains, revaluation of assets, and change in the carrying amount of assets or liabilities are not included. See, if I put it in simple terms, they are all book entries. It's not real profit that is being generated, but it is just a book entry profit. So since it's a book entry profit, it cannot be included. So I repeat again, when we talk about final dividend is paid out of profits, out of accumulated profits, out of both, or out of money which is provided by the government because of a guarantee given by it. But when I calculate my profits or when I calculate my accumulated profits, notional gain, unrealized gains, revaluation, or change in the carrying amounts because the assets or liabilities are valued at the fair value, if there is any change, difference which creates a profit, that profit cannot be included. Why? Simply put, they are just book profits. Now, when we talk about dividend, if the company, before declaration of dividend, if the company wants to transfer some amount to the reserves, can it do so? Yes. But is it mandatory? No. So company may transfer any percentage? No, it's your choice. Any percentage of profit to reserves that you want. If the company has defaulted under section 73 and 74, what is section 73 and 74? Section 73 is deposits and 74 is repayment of deposits accepted before the commencement of the act. If the company has made default under that, company cannot pay dividend to the equity shareholders. And if I'm a Section 8 company, whatever happens, company can never declare dividend. Now, when we talk about dividend, dividend is paid. Can dividend be given in kind? No. Dividend has to be paid in cash or cash equivalent. So what do I mean by cash equivalent? It can be a check, it can be a warrant, or it can be an electronic mode, but never in anything other than cash. And it is paid to the registered shareholder or as per his order or to his banker. So if let's say the registered shareholder says, please pay my dividend to this person, in that case, dividend will be paid as per his order to that specific person. Now, what do I mean by final dividend? Final dividend is that dividend which is declared at the AGM. What is interim dividend then? So interim dividend is between two AGMs. So here was my first AGM, here is my second AGM. Between this period, if I declare a dividend, it is called interim dividend. So let us say this is my financial year 22-23. This is my financial year 23-24. Somewhere here I call an AGM. So can I declare interim dividend any point here? Yes. Can I declare any point here? Yes. So it is declared during the financial year or period from the closure of the financial year to the holding of AGM. Out of what do I declare my interim dividend? Out of surplus in PL. Now, this is not reserves. So, in case of final dividend, it was what? Reserves. But in case of interim dividend, it is what? Surplus of PL. Right? Profits of the financial year for which interim dividend is declared. So, let us say I am declaring interim dividend for the year 22-23. So, whatever profits I have earned in the year 22-23, can I use that to declare interim dividend? Obviously, yes. And then again, it can be, so let's say I am declaring it in the month of July, okay, or in the month of August, I'm declaring interim dividend, okay, for the year, for the preceding financial year. So can I use the profit that was generated? Can I use the profit that was generated between April to June? Yes. So profits of the financial year till the quarter preceding the date of declaration. So if I'm declaring it in the month of, so I'm declaring interim dividend for 22-23. Can I use the profits of 22-23? Yes. I am declaring interim dividend for 22-23 in the month of July 23. So can I use the profits for the first quarter of 23? Yes. 23-24? Yes. So it can be out of the surplus in PL, out of the profits of the financial year for which it is declared, and out of the profits of the immediately preceding quarter in which the interim dividend is declared. Now, if I have suffered any loss, so in the current year, so let's say I'm declaring it in the year 23-24, but it is obviously for the preceding year. And in this current year, I am facing loss. And let us say I declared it in the month of July, I am declaring interim dividend. But in the quarter of April, in the quarter of April to June, I have suffered a loss. Okay, in the quarter of April to June, I have suffered a loss. Then my rate of interim dividend cannot be more than the rate of the three immediately preceding financial year. So see what's given here. If there is a loss during the current year up to the quarter preceding the declaration of interim dividend, then the rate of dividend should not exceed average dividend declared by the company during the immediately three preceding financial year. I hope it is clear to all of you. Yes, I hope it's clear to everyone. So I repeat again, interim dividend is declared out of the surplus of the profits of the surplus in the profit and loss, or out of the profits of the financial year, or out of the the quarter immediately preceding the quarter in which the profits in which the interim dividend has been declared. So profits of the immediately preceding quarter. If till the immediately preceding quarter the company has suffered any loss in the current year, then the rate of dividend cannot be more than the average of the rate of the dividend of the past 3 years. I hope till this point it is clear to everyone. Yes. Now, dividend out of reserves. Can a company declare dividend out of reserves? Yes, but very specifically only free reserves. Very specifically only free reserves. Company can only use its free reserves. So it cannot use any reserves other than free reserves. But there are some points. First of all, the rate of dividend, okay? the rate of dividend should not be more than the average of the rate of dividend of the past 3 years. Ma'am, in the past 3 years, I did not declare dividend on all the 3 years, then this point will not apply. Right? So the first rule says that the rate of dividend should not be more than the average of the rate of the dividend of the past 3 years. Second, the amount drawn. So let us say I have declared a dividend and my total dividend comes to 1 crore. So how much will I have to draw? 1 crore. Should not be more than, the amount should not be more than 1/10 of my paid up capital and free reserves. That means whatever my paid up capital and free reserves is, the maximum drawal that I can make is how much? 10%. Whatever I draw, that money will be first utilized to set off the previous year losses and depreciation. So let's say I have a loss of 10 lakh. So I'm withdrawing, let's say 1 crore. I have to first set off 10 lakh from here, and I can only use the remaining money to pay off my dividend. And the balance in reserve. So I'm going to take out of the reserve. So whatever balance is remaining in my reserve should be minimum 15% of paid up capital. That means whatever is left in the reserve cannot fall below 15. That means I should always have a minimum of 15% of the paid up capital in my reserves if I'm withdrawing money to pay dividend. I hope it's clear to everyone. Yes? Now, once the company declares dividend within 5 days, so whatever, let's say my total amount of dividend, as we said, 1 crore. Within 5 days, this 1 crore shall be deposited in a separate bank account with a scheduled bank. Now, see, once I've declared dividend, note this money does not belong to the company. Company has to give this money to the shareholders. And if the shareholders have not claimed the money, it will be given to the government fund. So within 5 days, the company will transfer this money in a separate bank account, and within 30 days, this money should be paid. Right? Within 30 days, this money should be paid. If within 30 days, any money remains unpaid or unclaimed. Now, unpaid, if I read the word, it looks like the company has not paid it. But here, the word unpaid is not used in the way that company has not paid it. It has been taken as the shareholder has not claimed the money. Okay, then within the next 7 days, the money should be transferred in a separate bank account called the unpaid dividend account. Right? The money shall be transferred in a separate bank account called the unpaid dividend account. If any member is claiming this money, he can come with his documents, prove it, and take the money. Within 90 days of the transfer, I will make a statement giving the name, the last known address, and the amount of dividend that is unclaimed, and I will put it up on the website of the company. So that if anyone has not got, they can go and check on the website. They will know whether they owe, whether they have a right to claim the money or not from the company. Here, the money stays for 7 years. Anyone who has a right over this money can claim this money within the 7 years. After the 7 years, if any money remains unclaimed, it will be transferred to Investors Education and Protection Fund. It will be transferred to Investors Education and Protection Fund. Can I claim my money from here also? Yes, you can claim your money from here also. You can claim, you can go take your documents, prove that you are the owner of the shares, and you can claim your money, the dividend. In fact, if on any shares the dividend are not claimed for 7 consecutive years, then that dividend also, that shares also. So first year company declared dividend, you did not claim. Second year did not claim. Like this till 7th year, you did not claim your dividend. Then the shares will also be transferred to the Investors Education and Protection Fund. Ma'am, can I go and claim my shares? Yes, you can take your documents, prove that you are the owner, and take the shares. I hope it's clear to all of you. I hope it's clear to all of you. Yes. So what is this Investors Education and Protection Fund? It's a fund which is formed under Section 125 of the Companies Act. It is formed by the central government, right? It is formed by whom? By the central government. And the books of accounts are obviously prepared as per the directions of C and AG. And the books of accounts are audited also by the C and AG. The members, who are the members? It shall consist of a chairperson and other members not exceeding 7. And there shall also be a chief executive officer. appointed by the central government. I hope it's clear to all of you. Now, what can this fund be used for? If anyone claims the money, can the money be given to that person? Yes. If I have to use it for promotion of investors awareness, I'm making an ad, a movie on investors awareness, can I use it for that? Yes. If there is a class suit and the class suit is justified on behalf of the person who is filing it, then the money for the class suit will be reimbursed from this fund. Now, what are the amounts transferred to this fund? First, any donations by the government, any grants by the government. Under the Old Companies Act 1956, under Section 205C, we had an Investors Education and Protection Fund. So whatever money is there in that fund is closed and that money will be transferred here. Right? Then after that, any amount which is unpaid, obviously unpaid 7 years we just saw, that will also be transferred here. Now it's a fund, so obviously we will invest this money somewhere. So wherever we have invested the money, whatever return we are getting from this investment, that also will be transferred to the fund only. Now, application money. The shares were never allotted. So the company was refunding this money. Someone did not claim it for 7 years. Deposits matured, someone did not claim it. Debentures matured, someone did not claim it. If 7 years you don't claim it, shares are redeemed, preference shares are redeemed, no one claimed it for 7 years, then this money will also be transferred to this fund. And interest, any interest on all of this, that means you are keeping it for 7 years, you must have kept it in a bank, some interest would have come on this money, that will also be transferred to the fund. Then amount received on disgorgement or disposal of securities, that is when when basically a person is personating himself and then the shares are disposed of. So whatever money we get from that disgorgement, then sale proceeds, fractional shares. So let's say amalgamation has happened. For every 5 shares, you will get 1 share. 13 shares you have. So those 3 shares will be sold off. Now, if you don't claim the money of those 3 shares for 7 years, it will be transferred to Investors Education and Protection Fund and any other amount given. What happens to the dividend pending transfer? So basically what happens, you made a contract for selling your securities here and the company finally transferred, that is registered your transfer here, right? Company finally registered your transfer here. So here you made a contract and here the transfer was registered. Now, in between this period of time, let us say company declares dividend or company declares bonus shares or company declares rights shares, what will happen? So, the bonus shares and rights shares will be kept in abeyance. Abeyance means suspended. Once the shares are registered, it will be given to the transferee. If the shares are not registered, refuse registration, it will be given to the transferor. As far as dividend is concerned, if the registered shareholder has given a written direction to the company that please pay the dividend to the transferee, the dividend will be paid to the transferee. But if he has not given any such written declaration to the company, it will be transferred to unpaid dividend account. And then from there, you can go and claim the money. Now, the last section here, section 127, punishment for failure to distribute dividend. What happens if the company fails to? Now, this is fault of the company. Section 124 was not fault of the company. That was member did not claim it. Here, company did not pay. If the company fails to pay, the company has to pay simple interest at the rate of 18%, and every director of the company who is knowingly a default, that is knowingly has made a default here, shall be liable to imprisonment up to 2 years and fine which will not be less than 1,000 for every day. Can it be more than 1,000 for every day of default? Yes. However, in the following cases, it will not be considered as a default. Dividend not paid due to operation of law. That is, let's say a member, a court has passed an order that this member, right now this person will not receive any payments at all. So company wants to pay dividend, but court order has banned payment. Maybe he has done something illegal, whatever. Obviously cannot pay. Shareholder, let's say you have given your bank account number to the company and you tell them, please transfer the money directly to my bank account. Company was trying to transfer, they filled in the account number 4 times, 5 times. Ting, 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 does not exist, does not exist. Now, they also informed you that, look, this is happening, but you did not respond. Is the company liable? Obviously not. Let's say a member is dead and his legal heirs are fighting. I will get the money, I will get the money, I'll get the money. Now, company is like, who should I pay the money? So, there is a dispute about who will get the money. Company had given a loan to the shareholder, he did not repay. Company is like, I'll adjust your dividend against that. Can the company do? Yes. Is it company is at fault? No. And any other reason other than this for any other reason, but which is not the fault of the company. So these are the cases where the company can uh, not be held liable for not non-payment of dividend. I hope it's clear to all of you, and I hope this video helps. If it does, please leave a like, gives us a motivation. Leave a comment so that we also know, gives us a motivation. I have been uploading quizzes for the chapters. I hope you're solving it. Make sure you do. Happy learning and stay motivated.